Hello and welcome to the Books Crypto Club catch-up on Zoom. It is Sunday the 12th of December 2021 and we're going to be talking about, well, potentially all sorts of things really. It could be cryptocurrency, blockchain, DeFi, NFTs, ICOs, STOs, or any other three-letter acronym you can think of these days in this crazy world of crypto. The conversation tends to be focused around whatever people want to talk about. We don't have a fixed agenda. We have these meetings every Sunday as a really useful way of just finding out news, views, information, sharing ideas. If people are novices and are just learning in this space and they want to know more, this gives an opportunity to ask questions. And sometimes we have some experts who can help them in some way. So we never really know how it's going to go. If you enjoy this, do remember to please click on the subscribe, click on the like, click on the little bell to get notified when we have meetings, that kind of thing. Make comments, or even better, come and join us on a future meeting every Sunday, 7 p.m. UK time. Hope to see you there. Well, let's see who's going to come and join us today. It's good. Hi, Rob. How are you?
Yeah, very well. Yeah, this is the first one I've been to. Excellent.
Okay. Well, if other people join us, I'll probably end up going through the same spiel several times, but just for your benefit, it's a really informal thing. We don't have a fixed agenda or anything. We end up talking about whatever people want to talk about, to be honest. So if there's anything you come along today to learn about or to share info about, fantastic, just ask away. And that's really it. You know, what's kind of interest then?
To be honest, I'm very new to this, only sort of 3 months in. So so I will probably be more of an observer. Because obviously I'm not going to give advice because unless somebody hasn't, has got a day's knowledge, I'm going to be the newest here, I'm sure. So
it happens. It happens at times, and what you sometimes find. And it happens sometimes. You might have been doing it for 3 months, and you may have already hit some challenges about how you do certain things or understanding how things work. And you might find it out. I mean, the classic one is always people understanding things like wallets and how they work, and how to actually get your bank to agree to pay money into a crypto exchange. Because in the UK, that can be a bit of a drag because most of them kind of red list them these days.
I hear that, but I'm with HSBC and I've had no problem at all.
Okay.
I don't know if I'm just lucky. Or I don't know, but
you're probably just under the radar and they haven't noticed there. It does vary completely. You're right. I know people who seem to spend every day complaining that they can't get their bank to do things, and then you get different people with the same bank saying, "I've not had a problem." Yeah. So I think it really does depend. Certainly depends maybe which accounts you're trying to connect with.
Yeah, so it might be how your profile looks to them as well.
Yeah,
because they do a lot of profiling. So it might be a lot to do with that.
Yeah, I think you're right. So what brought you into crypto then?
Well, I've sort of been involved with investments and property and things like that for years, and really it's just the next stage, I suppose.
Mm-hmm.
I enjoy investments and, I've been share dealing for years. But I think that's because of the sums that you work with, you are you're a very small fish, you're a minnow. Where I think in crypto, certainly at the moment, you're not like that. Because the pension funds and that aren't so involved at the moment. I think as days go on, they're going to be getting involved as much as they can.
Yeah, I agree. I've got a personal philosophy about it all, that I think what's going to happen is we're going to see a few things go quite badly wrong in crypto in some way, whether that's scams or collapses or intentional, whatever, I don't know. And then as a result, the regulators will get more and more interested as the government gets upset about granny losing their money and that kind of thing. Regulators will get interested. The regulators will regulate more and more and more. But what that then means is that by the end of it, crypto will be a regulated activity which then makes it accessible to the pension funds, the hedge funds, and asset managers.
Yeah, I agree. And in one hand, you're like, yeah, Granny shouldn't lose all her money. And on the other hand, you're like, well, I don't want it regulated because I like the freedom that it gives, where you make your decisions and you stand by whether it was good or bad.
Yeah, I think that's the thing it's very frustrating when you read whether it's reports from the FCA or government spokesman or whatever, and their general opinion at the moment is, oh, crypto is incredibly volatile, incredibly risky. You could lose all your money. There's no guarantees. There's no certainty with it. So we're not going to let you take the chance. It's like, let me.
But they have to say that.
Yeah.
They have to be seen to be the responsible one that can go, told you so.
Yeah. But they let you go to the horse racing and they let you go to casinos.
Yeah. Well, yeah. And online gambling.
Yep. Yeah.
So you press a button to say, yeah, of course I'm 18. Although I'm only 7 with my dad's credit card. Yeah.
Yeah. It's funny. The FCA did a report on crypto derivatives a while ago, and good enough, they did like an outreach to the public, and they got survey results about whether the members of the public thought they should be allowed to trade in crypto derivatives and that. And the response was 97% in favor of being allowed to do these things. And it was astounding. It doesn't get much more certain than that. 97% were in favor of being allowed to take their own risks.
Yeah, they'll completely ignore it and tell them they were wrong.
Well, they did. That's precisely what happened. They said even though 97% said they were happy to take the risk, we're banning it, so we won't let you take the chance. So
that's right.
Yeah, so that's the way it goes. So so that's why we've not got any ETFs or anything like that in the UK now, and that's why a lot of the stuff which the likes of Binance and some of the exchanges were doing had to all get wound down. So interesting stuff.
Yes, well, I think for governments, the other problem they have is how they can't control it. So the only thing they can do is regulate it. And once the platforms like Binance agree to the regulation, because that's what they've got to do. If they can say, or whether it's Qcoin or whatever, if they can get them to all agree to the regulation, then they've regulated it by the back door. Yeah. So, which is the only thing they can do.
Yeah. Well, the other thing I've seen up till now, which they are doing, is before they can regulate the actors in the market, they begin to regulate the on-ramps and off-ramps to the market. And this is where I've seen the thing that you get things like letters from the FCA going out to all the CEOs saying, please be aware that crypto is a highly dubious activity, and we expect you to do due diligence to the highest level and all this kind of stuff. Yeah, which is kind of a warning shot to the banks.
Yeah, well, clearly they're speaking to the banks about it, because I've heard that people are getting letters from the tax office saying if you do a tax return and you're doing crypto, you got to include it. Yeah. Where are they getting the details from?
So that
they be the bank.
Well, actually, with HMRC, I believe they're getting some of it from the exchanges. So certainly the more well-known exchanges, the likes of crypto.com, Binance, and some of the others, Coinbase in particular. Yeah, I know certainly in the States, Coinbase was actually subpoenaed by the US tax authority because they wanted a copy of every single record of every transaction of every trade that had taken place. And Coinbase, I believe, said, that's an unreasonable request. We're not doing that. And what they eventually agreed on was, I think it was of any transaction over either $5,000 or $10,000.
Right. Okay.
Had to be provided. But the thing is, if you think about that for a moment, what that means is that Coinbase has handed over the public key details of the wallets where significant trading has taken place, and they'll have provided the KYC details to go with the wallet. So you've now got a person's identity linked with a wallet, and even though they only sent transactions of $10,000 or more on them, because they now know your wallet address, then the US government can then take a look at every other transaction that's done Yeah, so you can see that certainly going. And I think
Yeah.
they did something similar with Coinbase in the UK. I think someone mentioned the other week. So you've got likes of, there's companies like Elliptic and Chain Analysis who do great analytics on blockchains. And I think they've done some government contracts as well around tracking things. So yeah, you're right. Some of it might be coming from banks who've alerted that they've seen transactions going to like a Binance account or something. Yeah. And then some of it is from the exchanges as well. This is why some people are getting really into the idea of decentralized exchanges, because with decentralized exchanges, there's less, if any, KYC and AML and due diligence and that kind of thing. So you're kind of trading anonymously on those.
Yeah. Yeah. I mean, I'm not into it that well at the moment to understand how I would do that on a decentralized, thing. I'm just on Binance and Coinbase and Coinbase Pro. So
yeah, well, I keep
keeping it simple to start with.
And that's the best way, to be honest. I think one of the problems that the crypto world gets itself into at times is it makes stuff too complicated. And actually, the easier you can make things and the easier to access things, the better.
Yeah.
But the other thing as well is you talk about Binance. Even though Binance is a centralized exchange, Binance has changed its location of where it's technically based so many times. It's probably as close as you're going to get to a decentralized exchange anyway at times.
Oh, okay.
Yeah.
Right.
Yeah, they've changed their headquarters several times, and they've shut down operations and that kind of thing. So
because they don't operate in the US. So from what I can see,
well, but Binance,
a lot of people can't access it in the US.
So Binance.us, the US website, I think they wound that down. And then there's still people I know who are using technology such as VPN to kind of like mask where they're coming from. Yeah. So they still find ways around it and that kind of thing.
Right.
Yeah. So yeah.
I'm not that clever.
Well, it comes to the thing that it's hard enough to do this stuff the simple, easy, right way. But by the time you get to work out clever ways of doing stuff, it's like, nah, it's too much. But that said, I've done some work with some UK-based companies, and they're totally legitimate, totally bona fide, but trying to sort out a bank account for them is nigh on impossible. And you end up, I was doing some work with a legitimate company a while ago who are beginning to handle cryptocurrency as a form of payment. And in order to do it, we had to set up, I think it was a bank account in Liechtenstein, a bank account in Estonia, and then have the UK account. And it's one of these bizarre things that in order to be legally compliant, you had to set up a financial flow that looked all the world like a money laundering process. It's like, well, no, we're doing this because we have to do this. And I always say, if you want to do money laundering, go and use the US dollar. It's far better for that. So,
well, yeah.
So how active are you in the crypto world? And you're just watching things, or you're actively trading?
I obviously, 3 months, my first month I was a hero, because 3 months ago, you could, you go, oh, that one, I can't pronounce it, but I'm going to put £1,000 on that. And, you were a hero, weren't you?
And it goes up.
Month, it all went to zero. And then, the third month, I'm actually learning what I'm doing. Yeah. So, I mean, I've been sticking with Bitcoin and Ethereum. They were the first two. I'm still up on Ethereum. Bitcoin, I'm not, but I've bought in again to lower my cost average. But I'm starting to look at the smaller coins to get to understand how I'm going to work, how I'm actually going to do it, whether. So I'm going to, what I think what I'm going to end up doing is having some long-term ones, and then a pot of short-term of small trades where I can make 50 quid, 100 quid. I came home for lunch one day last week. I can't can't remember what it was that I bought. It wasn't Dot. And anyway, I bought some. I went and made a cup of tea, came back and made 36 quid. So I was like, oh, well, let's sell them.
Mm-hmm.
I only came home for a cup of tea. So, and I was being paid by somebody else. You know, my employer was paying me anyway. So it's 36 quid on top of what I was getting paid. So I think, well, that's a profit.
Yeah.
I'm not greedy.
Yep. Yeah. And that's the thing. Sometimes scalp trades like that are quite good fun. But it's a matter of, I tried it as an experiment at one point where I spent a day in a coffee shop just constantly scalp trading stuff. So keeping an eye on things, identifying what looked like it was likely to go up, waiting for it to move up, selling out. By the time you'd knock the exchange fees off and the buy and sells and all this kind of thing, though, you certainly made money, but it's whether you'd want to do every day doing it was another thing. So
yeah, I think it's hard. I think it's hard unless you've got big pots of money with an even bigger reserve pot.
Yeah. And that's the thing that I realized as well. I could make enough out of it to make a living from it, but the risk in terms of how much capital you had to have tied up was quite significant in order to be able to earn enough. And it's one of those things that I think it's an interesting time to get into crypto at the moment because it's nicely volatile. It means that people are experiencing, as you are, that warm adrenaline or whatever it is feeling of it all going up. Oh, isn't this good? And then the collapse. And I think the collapsing and the dropping is a really, really important education to people, because I know some people who got into crypto when it's quite low and they put some money in and it rocketed and they thought they were absolute heroes. They were crypto experts. It's like, no, it just so happens. It's like what is it? Even a leaky boat rises in a rising tide.
Yeah.
You know, this isn't your skill that has led to this.
No,
but they were totally disillusioned that they were phenomenal. And so they were just putting more and more in. And then all of a sudden it turned. And it's like, well, this is where risk management comes in and this kind of thing. And it turned and it then caught them out. You get the whole, but I maxed out my credit card because I was doing so well on it. It's like, if you need to use a credit card, you're not doing very well on it.
That's right. Yeah.
So
they've missed the first rule, haven't they?
Well, this is it.
Only put in what you can afford to lose.
Yeah, I always say to people when I meet up with them, and they're quite often looking for recommendations, I say, look, first of all, I don't offer financial advice. So anything I say is not financial, taxation, or legal advice. The one thing I will offer is don't put in more than you can afford to completely lose. And by completely lose, I mean completely lose. It could go to zero overnight type thing.
Yeah.
And people still carry on that basis, and some of them do okay. And there's certainly there are techniques you can use to reduce the risk, which I think should be encouraged with people. But there's no way of guaranteeing profits, and anyone who does guarantee it, you know, I used to have it when I ran this club locally. I always used to say, you know, if anyone's telling you that they make guaranteed profits, before you, well, it might be that they have done really well, but just to prove it, ask them to show you 3 things to prove that they are really, really good. And they go, okay, what's the 3 things? They've got to own their own Caribbean island, which they've earned out of making from crypto. Got to own their own yacht, ideally with a helicopter on the back, and their own executive jet. If they haven't got those 3 things, then they've probably either made their money out of other people, or that they're not actually as good as they claim to be, and they're just having good days and bad days. So but each of their own. Some people do have a flair for it.
I do find it quite amusing with you know, people saying, oh, you know, you've got to buy XYZ, thank me later, and I want to reply saying, yeah, okay, I'll take your advice as long as you give me your home address, so when I lose all my money I can come around and punch you in the face. On that basis, I'll take some advice off you. If you're not going to do that, why should I listen to you?
The ones I get a lot of are the ones who get in touch with me because they found that I'm on a Telegram group or whatever, and they say, oh, are you interested in crypto? Oh, might be. Do you know anything about crypto? And I usually play a bit dumb and say, you know,
Yeah.
I'm just learning about it. And then they come back with I've got this scheme whereby we guarantee, 20%, 50%, 100% profit per day or whatever. You go, okay, guarantee, that's impressive. And you can absolutely guarantee that. Definitely. If you give us, even if you give us only $500, we'll guarantee to double it in 2 days or whatever. It's like, oh, wow, okay. And this is absolutely legit, is it? Oh, yeah, it's guaranteed. We'll do it. Great, okay. Well, I haven't got any money at the moment, but what I'd like you to do is, can you just lend me the money for a couple of days, and then I'll pay you back. I'll pay you back out of all the winnings. and they turn around and they say, are you being serious? So yeah, you just said it's guaranteed. You do nicely out of it. I do nicely out of it. Everyone's a winner. Never hear from them again.
That's right. That's right. Yeah. There's only one person that's guaranteed to do well out of it. It won't be you.
Exactly right. Yeah.
Yeah. So how long have you been involved with it?
So I got into the blockchain world, which is the technology that sits underneath crypto.
Yeah.
Probably about 2014, 2015, I started taking an interest in it. Yeah. I actually became a consultant in blockchain beginning of 2016. And for about a year, I avoided crypto, because you think about crypto is just a feature of blockchains. Blockchains do lots of other things, cryptos as well. So I kind of stayed away from it, because what I found was I was interested in what the technology does and how it works and what difference it will make to businesses.
Yeah.
Whereas the crypto world was all about, to the moon, let's make 1 million, 100x this, bloody.
Yeah.
It's like, I'm not. But eventually I got subsumed by it, started buying some crypto in 2017, some Bitcoin. Soon realized at that time just how difficult it was to actually understand what you're doing. How do I create a wallet, and what's a private key and what's a public key and everything. So I think it was around about 2018, I set up the crypto club. So Books Crypto Club, because I live in Buckinghamshire. It's not about books as in money. So we set it up in a local coffee shop. A few people came along, and it kind of went from there. So yeah, so crypto-wise, been into it for about 5-6 years thereabouts.
Okay.
So I've seen a few waves as well. I've seen the Bitcoin waves, like in the end of 2017, where it hit $20,000 and then fell off a cliff and dropped to something like $8,000. I've seen that kind of thing a couple of times. But I've also seen within the blockchain side of things, you get things like ICOs, so initial coin offerings. That was a real buzz in 2017, 2018. And that created a whole load of hype. Then 2020, you had DeFi kick in, and the whole decentralized finance, yield farming, flash loans, that kind of thing. 2021, you've got NFTs. So NFTs are exploding now. So
yeah, I hear about it all the time, and I don't really understand it. And at the moment, I can't bite off more than I can chew. So I'm just parking that, and I'm just going to get my head round, the simple side to start with.
I think with NFTs as well, you need to think of it mindset wise around one of two directions that you want to go with it. You either want to treat NFTs as a new form of investment opportunity like any other crypto, or you want to use NFTs for what they're actually intended for, which is as ownership certificates of other stuff. So this is why there's a big growth in things like digital arts, digital music, and that kind of thing.
Yeah.
But that's artists and photographers and musicians all getting into that space. It's phenomenal. I'm an advisor to, I think it's a couple of companies on that side of things at the moment. And that's fascinating. But also some people treat NFTs just as another investment class, just something that, again, you look at the chart and the numbers go up and down.
Yeah. I mean, historically, my investments is been invested in companies or houses, something that a company that produces a widget or an item or a house that has a rental income, where now I'm investing in something investing. I'm putting my money into something that I can't see, I can't touch, I can't feel. I can't pick up the phone and say, yeah, send it to me now.
Yep.
And so that as a concept is actually a bit strange. So,
well, that's where I found it interesting, because I used to do share trading that as well. And what I found fascinating is that you listen to people who are fairly new in the crypto side of things talking about doing fundamental analysis and technical analysis. Now, they're going to be terms that you're probably familiar with the traditional share trading world.
Yeah.
And I say, well, actually, fundamental analysis in crypto is really, really easy because there's no fundamentals. As you say, it's vapor. There's no actual asset ownership. There's no revenue coming in. There's no customers. There's nothing like that. So fundamentals for crypto is zero.
Yeah.
And then you get people getting a bit antsy saying, oh, well, what about all the investment in all the servers and all that kind of thing? It's like, that's irrelevant. No,
yeah.
If I buy Bitcoin,
they can be repossessed.
Well, the simple thing as well is that if I buy Bitcoin, that does not give me any ownership rights of anyone's servers, anyone in the world. It's just
right.
It's like I described it once of, it's like buying a can of Coke and me thinking that now gives me ownership of Coke. It just doesn't work that way. So fundamental analysis I find amusing, because what people actually mean by that is totally different from what you'd mean in share trading. Technical analysis, however, works very similarly to share trading.
Yes.
But it works for a reason different to what people think it does. Because most people, if you do technical analysis in shares, you're looking at earnings per share and yield and all this kind of stuff. In crypto, the reason it works is because enough other people are using it to make buying and selling decisions. I
was thinking that.
Yeah. Yes. So all TA does is it allows you to figure out the behavior of other people in the market, and it actually works sufficiently on that.
Yeah. Because I mean, all I use, all I use 90% of the time is the 14-day RSIs.
Okay.
And the other thing I've started doing, actually, where I'm picking out the smaller coins, you can look at on Coinbase, you can look at who the top risers are.
Yeah.
Well, I look at who the top fallers are.
Okay.
And have a look at and see why. How long have they been falling? What is it just a sharp fall, or has it been coming down for the last month? And look at the RSIs against how it's falling.
Okay.
Now, I don't know if that is just a way of doing it, or whether I'm missing something. But actually, I've made small profits from it.
Okay.
And so it seems to be working. I'm not putting huge amounts of money in because I'm not going to at the moment.
Right.
But on the smaller stuff, it seems to work for me.
Yeah, exactly. I mean, it's this whole thing. I mean, if you look at here, we've got the Bitcoin chart here. I don't know if you can see that, but even if you use simple stuff like that, there's a floor level here, there's a bottom around about, what's that, 48 mark or something like that. Never goes below that. It seems to be channeling up to about the 50 mark, 52 mark. 52, so straight away, you've got a range in there.
Yeah.
And you're right, you could add all the other bits and pieces like RSAs, 200-day moving average, 20-day moving average. You can have your fun of where the golden crosses are and all this kind of stuff.
I just zoom out. So zoom out and just look at a bigger picture.
Yeah, well, this is the thing I find interesting as well. That, I mean, if you look at this chart at the moment, it's the 1 hour chart, and you can see there's a nice uptrend going on here. And you go, oh, that's rather good. But then if you take a look at the 1 hour, 15 minute, 15 minute again, it kind of shows it's going quite nicely. But then you look at the 1 day, and it's like, well, actually, you're on a rising trend within a dropping trend. And that's where I agree with you, that you sometimes look at the longer term stuff and look back a bit further away type thing.
Yeah.
And this is where when people who are new to crypto say, oh, well, is it a guaranteed money maker type thing? It's like, well, if you're trading short term, then no, because you just never know where it's going to go. But if you're looking at it as a long term thing, then it's kind of interesting that, I mean, there's the long term chart for Bitcoin, and we can see, you know, certainly if you bought in at this point, you've had a wonderful life. Yeah. But the key thing, it doesn't really show in this chart, is that as long as you've held whatever it was you bought for at least 4 years, then you are ahead. There's no points anywhere in its history where it's had its ups and downs. That, you know, if you bought back in, what's that, 2000, and it dropped for a while, still recovered. If you bought here and it's gone up, and even if you bought at the previous peak, this is the one earlier on this year,
21,
yeah, where it's doing quite nicely, and then you have this sudden drop down of a good few $1,000s. Or if you bought here and it dropped down all of a sudden, well, as long as you hold on, even though it's in a bad place right now, it's still ahead of where it's been previously. I mean, where's January on here? You know, start of the year, it started at 26,000. So it's up at 50 again. So it's what, it's like 40% in a year? Yeah. Compared to your ISA or your deposit accounts.
That's right. Yeah, that's done bugger all.
Exactly. Yeah. But you're saying about Ethereum as well. It's interesting looking at Ethereum. I was looking at earlier on. That seems to having quite a nice recovery today.
It does, yeah. Because I bought at 29, something like that. I think, was it 29? That's in pounds, not dollars.
Okay, right.
And then it went up to 33, and I think at the moment it's back down at about 30.
Okay.
So
I have to admit, I tend to track things in dollars because.
Well, I actually was reading on that last night, because some things aren't available in pounds, and on Binance, I was thinking, do I buy using BNB because you pay a lower fee? And I read a thing where I made a post and people saying, just use dollars, stick with dollars because everything's in dollars.
Yeah.
Change your home screen to work in dollars and just work in dollars.
Yep.
So that's a change I've got to make.
But it's simply because the most of the market talk about things in dollars. And so, again, this is where it comes back to the psychology of selling and that kind of thing. That I think someone was making a comment, maybe it was you or something the other day on one of the groups, about how it was that something had hit a floor, a baseline number of something like £3,000 or something. And I made the comment of, no one trades in pounds, so no one will notice it's hit £3,000. Because you do hit these kind of like these psychological barriers. Yeah. And that's the thing with with Bitcoin in particular. You know, $50,000 is the one that gets talked about a lot, because $50,000 seems to be the thing that people watch out for. That once it goes through the 50K mark, it usually rockets up again. What on earth that is in pounds? Don't know. Is that £38,000 or something? I don't know.
Don't know. Probably.
Yeah.
It's about that.
So yeah, it's one of those things that I tend to say to people. Probably it's easier to just track things in dollars. The problem you then get is obviously you got the risk that you're watching the markets and you're thinking, oh, I'm 20% up because Bitcoin's gone up against the dollar 20%, and you haven't noticed that the pound's risen by 10% against the dollar. Yeah. And actually, you're not actually so far ahead as you thought perhaps you were. Yeah. If you want to cash out, that is.
Yeah. So is that USDT?
Well, I happen to use
USDC and.
Yeah, there's various stable coins. So I tend to use Tether as an indicator. So as you say, USDT. Yeah. But in theory, USDT, USDC, And Binance have got BUSD as well, which is the Binance USD token.
Right.
In theory, they're all stable coins, which means they should all be worth $1. So you should be able to use any of them. It doesn't quite work out that way. But
See,
what I'm trending
one thing that I don't understand is where you have pairs. So you've got you can have Ethereum against the dollar, the pound, if you're on Coinbase. But then if you go on to Binance, you'll have it paired with other things.
Mm-hmm.
So for instance, if I was to buy XYZ using pounds on Coinbase Pro, but on Coinbase, they don't have the same pairing, I can't transfer it to Coinbase, can I? I can only transfer it there if they've got the same pairing. Or am I reading this wrong?
Okay, so it depends what you're trying to achieve. If you've used Coinbase Pro and you're using pounds to buy Bitcoin, as an example, then you can go off and you can buy your Bitcoin using pounds. You've then got a holding in Bitcoin. You can then transfer that to Coinbase and use that to buy Ethereum or anything else. It's just that you're then paying for it in Bitcoin. Does that make sense?
That does make sense. Now, the next thing that confuses me then is about it being ERC20 or BEP. Now, it's like, oh, I can't convert it from that to that, or because they're on different things.
Right. Okay. So I can probably
it
answer.
Then becomes a minefield.
Yep.
And I tie myself up in knots.
Okay. So we got two things here. This might get a little bit technical.
Yeah.
For any given blockchain, and a few examples of a blockchain are the Bitcoin blockchain, the Ethereum blockchain, the Dash blockchain, the Cardano blockchain. They have an associated cryptocurrency. Okay, so the Bitcoin blockchain has a currency called Bitcoin, and the Ethereum blockchain. So think of each of these as different databases. All right.
Right.
So if I say the Bitcoin database instead of the Bitcoin blockchain, actually it's kind of quite synonymous. Then the Bitcoin blockchain uses a cryptocurrency called Bitcoin.
Yeah.
So there can only be one cryptocurrency with a given blockchain. All right.
Yeah.
Park that. So we've got Bitcoin, Ethereum, Dash, Monero, Cardano. These are all blockchains that have got a cryptocurrency on top of them. What you then have, and this was introduced particularly with Ethereum, is the ability to create what's called a programmable token. So that this uses what's called a smart contract, and an ERC20. ERC is just an Ethereum request changes. It's a bit of software, right? And it's a bit of software that creates what's called a crypto token. Crypto token behaves, looks, and feels just like a cryptocurrency. So if you've got crypto token like OST, which is simple token, it's 3 letters is OST. You can trade it and everything like that, but it does not have its own blockchain. It's not what's called a native cryptocurrency.
Right. Okay.
So tokens are programmable cryptos that sit on blockchains. Now, on Ethereum, you've got ETH, which is the Ethereum cryptocurrency.
Yeah.
You've then got a whole range of crypto tokens, which are effectively people have created their own cryptocurrencies.
Okay.
And they are typically, if they're on Ethereum, they will typically be ERC20 tokens. So ERC is just kind of like almost like a programming standard. If they're on Bitcoin, well, Bitcoin doesn't really have programmable things on it. Binance chain, Binance has got programmable things. I think they're BEP, as you say.
Yeah.
The problem with that is if you've got a bit of software that's running on Ethereum, which is what a smart contract or a token is, you can't then buy and sell that bit of software to transfer onto another blockchain to operate on, because it's designed to run on that particular blockchain. So that's why a Ethereum smart contract, an Ethereum token, will only run in the Ethereum ecosystem. So that's why when you say, oh yeah, they only trade in ERC20 tokens, or they don't, or they're not interoperable, that's because you can't transfer them across. It's like you can't transfer them across databases in effect.
Yeah,
so.
Yeah. Because I what was it I bought the other day? And I couldn't transfer them to Binance. Do you know what? They might have been, you know, when you sign up with Coinbase and Coinbase Pro, there's these free coins that you can get if you listen to some garbage for a minute.
Yep.
I tried transferring them onto Binance and I couldn't. And it was like, they just didn't, I don't know, they didn't cater for each other.
Yeah.
And
that's effectively it. If you think about, so you got things called crypto tokens, of which NFTs, by the way, are a type of token. But you got these crypto tokens which sit on a blockchain, and that's why they'll only operate within that one blockchain. So if it's an ERC20 token, then that is an Ethereum-based smart contract. So it's an Ethereum bit of software. So you can't lift that off that database and run it on a different blockchain.
Right.
So that's why it is. But Binance runs its own blockchain.
Yeah.
And that's why you can't run other people's crypto tokens on it. So this is where you start getting, it gets a little bit confusing. And I've done stuff with regulators and all sorts of explaining what the difference is between a native cryptocurrency, a crypto token, and then a crypto asset, which is something different again. Because you can have stuff like, you can have a crypto token that points to a digital asset somewhere. So like an NFT is a good one. You think about, you've got a piece of art or something.
Yeah.
And an NFT effectively points to that. So that's kind of a crypto asset in some way. So yeah, they all get confusing, particularly because on some exchanges, you can trade all three and you don't have to know which is which. They behave similarly because you can buy and sell them. So yeah, it's all part of the learning journey, I'm afraid.
Yes, yeah, I guess. Yeah.
Okay. And this is where I tend to say to people, start as you are. Start with simple stuff. You know, stick with Bitcoin and Ethereum or whatever. I still think that long term, I've yet to see any crypto token or cryptocurrency outperform Bitcoin long term. So you will see some cryptos, particularly ICOs and NFTs, where they'll explode for a moment. So Shiba is a good example, or Dogecoin, or all the meme coins, where they'll go up 10-fold, 100-fold, or whatever briefly, and then they'll collapse back down again, and they'll settle down. And when you and unless you're able to time it for when they're going up, at the point that they're going up, you're probably easier just to stick with the more basic or traditional ones.
Yes.
And they still do quite nicely, because I used to track about 20 different cryptocurrencies, and I found consistently Bitcoin always over time outperformed all of them. Yeah, you know, in terms of going up in price type thing. So, you know, but it's good fun, you know, because you get to spot there's different cryptocurrencies have different kind of like behaviors. So some of them you start spotting certain trends.
Yes. Yeah, there is only about, there's probably a maximum of 10 that I actually look at regularly. There's other ones that just sort of catch my eye, and I sort of make a note of it, and I'll look at it for a week to try and understand it, and I might think, oh no, I'm not going to bother looking at that anymore unless, you know, something.
But it's a bit like share trading, the way that you look at the different markets. You know, the property market operates in a certain cycle. I think it's kind of like a 7-year cycle or whatever. and it's a different cycle to the commodities market.
Yeah.
And you start spotting things like pharmaceuticals doing really well at the moment, but property is really down, and all this kind of stuff.
Yeah.
Which I guess if you're into Pfizer is probably particularly true right now.
Yeah. No, I've done well on pharmaceutical funds in the last year. So.
Yeah. But it's in a way it's similar to crypto as well. And then you get the thing as well, you'll probably notice that Bitcoin does still dominate the market. And if Bitcoin goes up or down, the others tend to follow.
Yes. Yeah.
Yeah, and I found it interesting. Someone was asking me on one of the forums the other week is that always the case? And I said, yeah, it's absolutely always the case, except for when it isn't. And you just don't know.
No, that's right. Yeah. Because there's no givens, is there?
Well, that's right. I mean, if it became predictable, we'd all be doing loads. The other thing to watch out as well, because you were mentioning multiple exchanges, is there are sometimes arbitrage opportunities that you might see different prices across different exchanges.
I've noticed that with Coinbase and Binance, definitely.
Yeah. The thing to beware of, because it does look quite good at times of, oh, well, if I buy on Coinbase and sell on Binance or whatever, is that you'll quite often find that the margins that they operate on and the fees that they introduce means that what looks like, oh, yeah, I'm going to make 5% here. It doesn't always work out that way.
Yeah. I mean, I did spend, when I first started, the way I started, I opened up my my Coinbase Pro and Binance, and I put 20 quid onto Coinbase, and then I moved it to Coinbase Pro, and I moved it backwards and forwards to understand how that worked. Then I bought some Bitcoin, moved it to Binance, and moved it back, and moved it back again, and then swapped it for Ethereum. But what I was doing, I was looking at what the fees were. To do each of these transactions, and what I didn't, and I still fail to work it out somehow. Sometimes there will be a £5 fee for moving 100 quid, and sometimes it's 20 pence. It's like, well, hang on, I'm not going to move that. I'm not going to sell it then. If I've got to pay a £5, I'll keep it. So, and I don't know where they get these fees from. They're just pulling them out of the air.
Well, sometimes it's almost literally that for some of them, it might be they've got a fixed fee. So you're quite clear on that. It's like every transaction is £11.25 or something. But some of them might be, particularly with Ethereum, they'll be charging what are called gas fees.
I've heard about these, and I don't understand them either. But.
Okay, so you think about you're using a network of computers, which is managed by a bunch of people running their computers, consuming electricity and that kind of thing. These are called miners, and it's the miners and their computers that keep this whole network secure in there. The gas fees go to the miners. So it's a bit like if you use PayPal or something, you pay a commission, I think, on each transaction.
Yeah.
It's similar on Ethereum, that when you make a transaction, a portion of that transaction, the fee goes to the miner. The problem
is Ethereum a lot more expensive than the Binance platform, for instance?
I believe it typically is. I believe it typically is, which is why it can be easier to transfer funds using the Binance blockchain, because it doesn't charge. Yeah. Your other thing to watch out as well is that miners' fees, they're a bit like Uber prices, that when the network is busier, the transaction fees go up. So the way that, like with an Uber, so like with an Uber, if you go at a busy time of day, the fees are higher.
Yeah.
It's surge loading, I think they call it.
So you want to buy and sell at cheap rate.
That's right. And this is why Ethereum is getting quite expensive as a platform to transact. And so sometimes it might be easier just to take your stuff off the Ethereum blockchain, put it in Binance or wherever, as you say, or use a different blockchain. So I used to use a couple a while ago. One was BCH, which is Bitcoin Cash.
Yeah, I had some 20 quid's worth on. I actually did this as an experiment, and I ended up with it on Coinbase, and I didn't know what to do with it. I couldn't do anything with it. I was like, what a waste of time.
And that can be sometimes a problem. So Bitcoin Cash, I found, is really, really good for what I describe as real payments. So if you are actually going to pay for something, not buy crypto, but actually buy something, then BCH can be great because it's high speed and the transaction fees are low. So same with Litecoin. So Litecoin is another blockchain.
Yeah,
it's its own thing, and again, low fees and that kind of thing. And I've done it where, similar to what you did, where you transferred stuff around. I've sat with someone in a local Starbucks before now, and we've both got our mobile phones out, and we've just played at transferring across to each other. And if you try and do that with Bitcoin or Ethereum, you run out of money very, very quickly, because there's all the commissioning and everything like that.
Yeah.
Whereas if you do it with Litecoin or Bitcoin Cash, there's hardly any fees type thing. And that's doing it peer-to-peer as opposed to going via an exchange.
Yeah, see, I've not looked into peer-to-peer yet. I have seen that on the Binance platform. There's a bit about it, but I've not even looked at that yet.
Okay. Well,
is it where you're buying Bitcoins like privately, rather than off the network? You're buying them from a person.
That's right. So I've done it where I've sat with somebody who I know, and we just literally get our mobile phones and read each other's QR codes and do a transaction, and that's not going via an exchange then. So if you go via an exchange, you're obviously paying the exchange potentially a fee.
Yeah.
Whereas the great thing about crypto, you can do it direct.
Yeah, but if you're doing it peer-to-peer, you need to know the person. Otherwise,
well, you don't need to. You don't need to
not get the Bitcoin.
Yeah. And this is the thing again where that introduces a risk element. So I've done it before now. I used to run meetings in London, and I'd charge like a nominal amount for people to come and take part, like an entrance fee or whatever. And I had someone who'd flown in from the States, and she had no English currency. I didn't particularly want dollars. And she said, "Oh, well, will you take crypto?" It's like, funny you should say that. Yeah, no problem. And we stood there, and she just transferred some crypto. Yeah, so that kind of thing works. Yeah. But yeah, you're right. You tend to need to either trust people or know people in some way.
Yes.
But there are markets that are called OTC markets, so over the counter. I think I'm trying to remember what the main Bitcoin one used to be, because there used to be an in-person Bitcoin trading platform.
Okay.
Which you would use to trade Bitcoin privately.
Right.
But again, it was good that if you knew the person type thing. Otherwise, you found yourself in a cafe in Shoreditch late at night with this stranger.
Yeah. Yeah. Okay.
But yeah, that's all interesting.
Moving on to I think it's going to take me a long time to get my head around the different the detail of it. But that's what it is. So I'll just keep listening and learning, basically.
Well, come along to these sessions, because some weeks we've got like 10 people or something on the call.
Yeah.
Or other weeks it can be a one-to-one or whatever. I'm quite happy to chat through things, and if you've got any questions or anything, just fire away. Because I find it's great when you've got people who've been doing it for a little bit longer than yourself. You might feel a bit awkward at times asking some really what you think is a really dumb question.
Yeah.
Invariably in the crypto world, it's not a dumb question.
Yeah.
I had it because I do training courses and all sorts around blockchain and crypto and that. And I actually had one person who was a university student who came up to me. I'd done a lecture on Bitcoin to I think it was Coventry University or something. And one of the students came up to me afterwards and said, yeah, well, this is all well and good. But I don't see the point of me learning about this because I can't afford a Bitcoin. I was like, what do you mean you can't afford a Bitcoin? She said, well, yeah, Bitcoin at the moment is trading at, I think it was $30,000. I'm like, thank you for telling me that, because that means I forgot to tell you, you don't have to buy a whole Bitcoin.
Yeah, yeah.
And, you know, she said, oh, I feel so stupid. It's like, no. It was me being stupid for not telling you that.
Yeah.
You know, so there's all sorts of stuff that you can learn about these kind of things.
Yeah.
Do you have any questions, Rob? Far away.
Well, no, I mean, the only thing I was going to mention next is I was just going to tell you how what my strategy is, and whether you think it's stupid, or whether there's a better one.
Well, go for it. All I'll say is that each week when I run these sessions, I record these. I do stick them up on YouTube as well. Yeah. Because I find that a number of people who've come up to me who said, I never go to your events, but I do watch the YouTube videos. And they're really, really good. Yeah, so feel free to share away. Yeah, just don't mention amounts.
Just before they started, I didn't realise that you put like the back catalogue on. Yeah, and I only just saw them a minute before it started. So afterwards, I'll go and watch some of the old ones. But so what I do at the moment, right, with my Bitcoin and Ethereum, sort of the top 5 coins, I have my buy-in price. So which I'm happy with. Now, if it goes up, happy days. If it goes up 10%, this is my plan. If it goes up 10%, if it goes up 5%, I will put a stop loss. So if it drops 1%, it will sell. So, but then if it goes up again, I'll move my stop loss up. That's fine. I'll keep doing that. But if it goes down 25%, I put in I put £100 in to start with. If it goes down 25%, I'll put in 125% more than I put in originally. If it goes down another 25, I'll put another 125% in. So I'm lowering my cost average. But I'll only do that on the top 5 coins because I assume that they will never go to zero. You know, if they go to zero, the whole thing is, is on its arse. So we've got, there's bigger problems happening, isn't there?
Yep. Yeah.
Is that a sensible approach?
So I'm not going to comment if it's sensible or not, because that could be construed as financial advice. Okay. But
would I be the only person doing it that way?
No, I was going to say that's another way of describing it. That what you're describing is exactly what a lot of other people do. Now, whether a lot of other people are being sensible or not is up to them to decide. Yeah. So the interesting thing was you keep using the term cost averaging, which is great, because some people call it dollar cost averaging, and you're not actually dollar cost averaging. You are, as you say, you're cost averaging the cost of the purchase of the asset.
Yes.
Whereas in share trading, it's sometimes called dollar cost averaging, because you're trying to get your dollar cost down. That kind of. Yeah. So it's a viable thing. I have had a discussion with someone about this who's quite a serious trader about the one flawed bit of it is exactly what you said, the doomsday scenario, that if you think about, if you're share trading, if the share totally collapses and the company collapses, ultimately you can sell the company, you can sell the assets, and you can get something back.
Yeah.
Whereas if a cryptocurrency collapsed, it really is zero.
Yeah.
So there is that thing. So it all comes down to your risk appetite. And if you think it's sufficiently unlikely, and as you say, top 5, very, very unlikely, except occasionally they do. So I've been watching crypto markets since certainly 2016, and the top 5 now only Bitcoin and Ethereum were in the top 5 then, and the other 3 have kind of like dwindled away or whatever.
Right.
So do just watch out, and it tends to be that nothing ever seems to quite go to zero, but it does go to such a low price that means it's not worth doing anything with it.
It's worthless, yeah.
So it's the equivalent. But what you're describing, the rising stop losses. You know, I've seen people do that. In fact, I'm not sure if any exchanges do actual proper rising stop losses, which would be the ideal.
Yeah, the only way I can see is that you have to keep manually
moving it. Yeah. The only thing to watch out for as well is if you've got the opposite of a rising stop loss, which I can't remember what you call it now, but like a falling stop loss, like a sell if you think the market's suddenly tanking.
Yeah,
is that the crypto world is still sufficiently volatile that I quite often get to hear about big price fluctuations, not because I get an alert on my phone, but because I start getting messages from people to say Binance has stopped working. And what you sometimes find is that the market collapses or repositions by 10 or 20% so fast that the stop losses don't kick in.
Right.
And even worse, I've seen some people get shaken out where they've put in like a stop loss to cover them with a dropping market, and the market is kind of like briefly bounced, and it's bounced below the trigger point, and then it's bounced up again, but they've still had the trade executed.
Yes, as it went back up.
Yeah,
it executed.
Yeah. And that's all happened in a matter of minutes or even seconds.
Yeah.
And I sometimes wonder if the exchanges are doing that to shake a few people out or something. But yeah, just watch out for that. But yeah, otherwise as a concept, it's certainly similar to what I've heard a number of other people doing.
Yeah.
So, right. Rob, I'm going to finish off for the day now. I'm surprised no one else joined us, but hopefully it was interesting for you anyway.
It was, yes.
Yeah. Look, do come along again. We do this every week. Sometimes we get loads of people coming on. Sometimes we just get a few. And it's great just to be able to share ideas and topics and that. And if nothing else, go and look at the back catalogue of videos now.
I will do. Sorry, last thing. Is your name Gary?
Yeah.
Yeah. Okay, no. That's good.
Unless the advice I offer, which isn't financial, goes badly wrong, in which case my name's Colin.
That's right, yeah. And I live at number 27, not number 29.
Exactly right. Rob, good speaking to you. Hopefully speak to you again sometime.
Yeah, all right. You take care.
Cheers. Have a good one. Bye now.
Yeah.